about if your parents have a party and they're serving alcohol, and someone's a little tipsy and they trip and fall and break their back. What is going to cover them? Your parents. So what if then their guest decides they're going to sue your mom and dad for liability? Liability, that's right. And usually on your homeowner's insurance, well, there's always in your homeowner's insurance policy, typically, let's say $500,000 of liability coverage, meaning, God forbid, someone slips and falls in your property, they sue you, you have $500,000 of coverage through your homeowner's policy. What happens if they are so injured that they can't work for the rest of their lives and they choose to sue you for $2 million? Well, you've got $500,000 of coverage through your homeowner's policy, but it stops there, right? And then you've got to pay the extra $1.5 million out of your pocket. Where is that coming from? Well, you don't have it. And they're going to probably garnish your wages, meaning you're going to be paying that for that lawsuit for years and years. So there's something called an umbrella policy. And this is another thing that you want to consider. Most of my clients don't have these policies because they just aren't aware of them. They're very inexpensive. And what an umbrella policy is it's a liability policy that basically sits on top of, it's an umbrella to your homeowners and auto policy. So you could, let's say, get $1 million umbrella policy so that in the event of a lawsuit, you now have the $500,000 of liability protection through your homeowners as well as the extra $1 million. And it's cheap. It's usually a couple $100s a year because it's not often needed. But if you do need it, it's the best couple $100s a year you've ever spent. Okay? So basically, insurance, we're protecting against a large-scale financial loss. And the premium, the premium, that's the dollars that you pay to the insurance company for that insurance policy. Okay? And what's the deductible? Someone know what that term means? Every insurance policy, or most insurance policies, have a deductible. It's how much you're responsible for paying before the insurance company kicks in. So, as an example, you have an auto insurance policy with a $500 deductible, and you have an accident, and it's going to cost $800 to fix it. So, what's the breakdown? You pay $500, insurance company pays $300, right? Now, think about it though. Would you submit a claim to your insurance company for $300 for total damage of $800? Probably not. What's the reason? Yes?
Because of the accident, your insurance costs might rise.
That's exactly right. The second they give you that $300 check, they're going to bump up the premium and get their $300 right back. Okay? They're going to make sure they get their money from you. Number two, they could decide, you know what, I don't want this kind of driver on my insurance policy. I'm going to drop them. And then you've got to go find a new insurance company. Okay? So given that, how does that impact what your choice of deductible is? Because you decide how much risk you're going to take based on the size of the deductible. So you could choose a $500 deductible or a $1,000 deductible. What do you think happens if you go from a $500 deductible to a $1,000 deductible to your premium? Yes?
Your premium goes down.
Your premium goes down, right? You're saying, I'm willing to shoulder more of the burden. I'll pay $1,000 if something happens. So as in return, insurance company, you need to charge me a little bit less for the insurance policy. And back to the question of, are you going to submit for an $800 claim anyway? Probably not. You may as well bump up your deductible to a minimum of $1,000 or whatever you're comfortable with to get the premium savings, right? Now that seems obvious, but again, I mean, I don't think a single one of my clients, when they started working with me, had a deductible that was any higher than $500. And none of them were going to submit for an $800 claim. So you save a couple $100 a year by increasing that deductible. Okay? Does that make sense? Okay. So we're going to talk about some different types of insurance. Auto insurance. If you look on page 85, talks all about auto insurance and how they decide how much they're going to charge you, okay? So if you have a really safe car with 4 doors, you know, a Volvo, or you're driving a Porsche, 2-door Porsche, which is going to be more expensive? What do you think? Porsche, right. It's going to cost them more to insure, and it's also, they think of you as riskier. Do you think the guys in this room are going to pay higher than the girls, or the girls are going to pay more than the guys? Guys are going to pay higher because you're just much more irresponsible than all of us. Yes.
And then also, depending on the colors of the car, sometimes you have to pay more.
Depending on the
If it's red, I think yellow too.
depending on the color of the car. Yes.
That is true, like, didn't they try to change that?
What?
Like, didn't they try to change that to take off the color thing, the color?
I'm not sure. I don't know. What about if you're married or you're single? Who do you think pays more in insurance premiums? Yes. Single. Great reason to get married, right? Save a little money on my car insurance. I'm just kidding. Don't get married for that reason. For that reason. As long as there are other reasons, that's fine. If you're driving a sports car, right, that's going to cost more. They're going to see if you have airbags, anti-lock brakes. Make sure that you've got all of that. And also, it's a good idea to shop around at a couple of different companies. Okay, this is the coverage I want. How much are you going to charge me? Well, this is what I want. How much are you going to charge me? I just did this for a client, and it was $900 a year from one company and something like $2,500 a year from another company. It was the exact same coverage, and both good companies, reputable companies. So it really pays to shop around. They're also, what do you think they're going to want to know about you? Not only about your driving record, but when they're deciding how much they're going to charge you, what do they want to know about you? What?
How much you actually use your car?
How much you actually use your car, but something we just finished talking about, yes. Your age, what else? Credit. This is another thing that comes into play. Not only if you mess up your credit, is it going to cost you a fortune in interest on mortgages, car loans, everything else that you get a loan for, it's also potentially going to cost you a job if your potential employer checks it, and it also could increase your insurance rates. Okay? So obviously, if I haven't made it clear, your credit is incredibly important, okay, your credit history. Health insurance. Health insurance pays bills if you or your family get sick or injured. Usually you're going to have it as an employee benefit, okay? And just as a bit of a side note, when you're out interviewing for jobs, which you'll be doing when you start college, maybe getting some jobs, and when you come out of college, it's easy to just look at that salary and compare various offers you have just based on salary. Well, this guy's going to pay me 40, this guy's going to pay me 50, so I go with the 50, right? Not necessarily. You want to look at things like employee benefits. One company may have health insurance and one doesn't. Well, that translates into a huge amount of money. What about if one company has a great employer match on the 401k plan and one company has no match? Well, that translates into a lot of money also. Okay, so it's really important to make sure you're not just looking at the salary when you're comparing different job offers. We talked about property insurance, homeowners and renters. What about life insurance? What are you insuring when you buy life insurance? Life insurance basically pays out in the event that you die. Okay, does everyone need life insurance? So if there's a family and the wife is the breadwinner, meaning she makes all the money, and the husband's the stay-at-home dad, the wife is the one who needs the life insurance. Do you think the stay-at-home dad needs life insurance? No?
I do.
Absolutely. Do you know what would happen if something happened to that dad, and let's say you have 4 kids he's taking care of? How much it would cost to replace his services? Child care expenses, cleaning people, cook, whatever you need to do to replace the stay-at-home parent, that absolutely has a dollar value on it. So you want to make sure that that person has insurance also. Now, do you guys need life insurance? Why? No one's dependent on you financially. That's exactly right. Okay? And you don't need life insurance until someone is dependent on you financially, and someone would suffer a loss financially if you died. Okay? And don't let anyone, i.e. life insurance salespeople who are going to make a lot of money selling you policies, tell you differently. Okay? The only reason that you might want to, what do you think? Why would you possibly buy a life insurance policy when you're young, single, don't have a family yet? I think I heard someone up there say something. What'd you say? Well, you can say something even if you didn't. What do you think? Why would you buy one before there are people financially dependent on you?
If something happens to you, your parents would benefit.
Okay, so if you're worried about your parents, right? And okay, so if you want to make sure your parents have some money in case you die. But what I'm thinking is eventually you're going to be possibly in a situation where you've got a wife or a husband, kids, who may